Welcome back to Explain the Charts, everyone. Today, September 25th, 2025, we're taking an in-depth look at Google, Alphabet's Class A shares, which have seen some fascinating and intense price action recently. On our daily chart, spanning from May 2024 to today, you can clearly see GOOGL's impressive run, climbing approximately 33% year-to-date and reaching a market capitalization exceeding $3 trillion. However, despite this monumental achievement, the stock is currently trading lower at $245.22, marking a noticeable dip from its recent all-time highs. This reversal has caught many off guard, and we're here to break down exactly what's happening. Let's zoom into the daily chart and focus on the period from early September 2025, where the real excitement began. Notice the significant bullish momentum that propelled Google upwards from around the $211 level. This strong rally was largely fueled by several positive news catalysts. On September 3rd, the stock saw a substantial jump, which aligns perfectly with the news that a federal judge imposed a muted penalty in an antitrust case concerning Google's internet search business, sparing it from severe asset divestitures. This decision brought a wave of investor relief, as seen by the immediate price surge. The momentum continued, with Google hitting a new intraday high of $252.41 on September 15th, coinciding with Google's Gemini app taking the top spot in the U.S. Apple Store, significantly boosting AI-driven optimism. Further reinforcing this bullish sentiment was the news of Google taking a stake in Cipher Mining through a $3 billion HPC colocation hosting deal, hinting at exciting cross-sector growth. The peak of this rally saw Google reach an all-time high of $256 on September 19th, showcasing powerful investor confidence and strong buying pressure. Now, let's shift our focus to the more recent candles on the daily chart, highlighting the sharp reversal we've witnessed since that $256 peak. Starting from September 22nd, when a second antitrust case, this time focusing on digital advertising, was set to restart, Google began its descent. The stock has pulled back from its all-time high, closing yesterday, September 24th, at $247.14 and continuing its downtrend today at $245.22. This price action indicates that investors are now weighing the regulatory headwinds from the digital advertising antitrust case against Google's prior triumphs. Additionally, reports of investors locking in gains after the extended rally and concerns about long-term threats from rapidly growing generative AI chatbots to Google's core search advertising business are contributing to this bearish pressure. These factors suggest a cautious sentiment has quickly replaced the earlier exuberance. To get a clearer picture of this recent downturn, let's switch to the 1-hour chart and narrow our view to the past few trading days, specifically from September 22nd to the end of September 24th. Here, you can observe the intraday volatility and the consistent downward trend following the news of the second antitrust case. We can see a clear breach of several minor support levels that were established during the preceding rally. The series of lower highs and lower lows on this time frame confirms a short-term bearish trend has taken hold. High volume during these price drops indicates strong selling pressure as market participants reacted to the renewed regulatory concerns and potentially took profits. The overall market sentiment around tech stocks, as indicated by the Motley Fool's report on Big Tech is Fun Again and the Fed Speaks, and concurrent declines in some Magnificent Seven stocks, could also be playing a role in this widespread profit-taking. For an even more granular look at the recent selling momentum, let's examine the 15-minute chart, focusing on the afternoon of September 24th, when the price action was particularly telling. You can see the stock struggling to maintain any upward momentum, with attempts at rallies quickly being met by selling pressure. Specifically, around 13:20 Universal Time Coordinated, after a brief attempt to rise, Google saw a notable drop from approximately $251.86 to $249.20 within the hour, indicating a rapid increase in bearish sentiment. This sustained downward pressure throughout the afternoon culminated in the closing price of $247.14. This pattern of sharp drops on increased volume, followed by weak recoveries, suggests that bears are in control in the immediate short term. Traders should note these rapid intraday shifts as they reflect immediate market reactions to prevailing news and sentiment, emphasizing the importance of staying agile. Returning to our one-day chart to recap, let's establish the critical price levels for Google. On the resistance side, the immediate level to watch is the previous day's close at $247.14, followed by the $250 round number. Above that, the significant resistance levels are the prior high of $252.41 from September 15th and the all-time high of $256 from September 19th. For support, the current price of $245.22 puts us near the first key level around $240, which acted as a consolidation point earlier in September. Below that, the $235 area, seen as a bounce point, is crucial. A more substantial support zone lies within the $211 to $226 range, representing the gap created by the positive antitrust news, which could act as a strong psychological and technical floor if the current selling accelerates. It's also worth noting MoffettNathanson's recently raised price target of $295, suggesting a significant long-term upside, according to some analysts. So, what does this mean for Google traders and investors? In the short term, the market is clearly reacting to the ongoing digital advertising antitrust case and broader profit-taking, suggesting continued bearish pressure is likely if no positive news emerges. There is a high likelihood the stock could test the $240 support level in the coming days, given the recent momentum and current price action. A break below $240 could see it moving towards the $235 area. For a bullish reversal and a retest of the $250 to $256 resistance range, we would need a strong positive catalyst, such as a favorable outcome or a surprisingly mild penalty in the second antitrust case, or groundbreaking news on Google's AI front. The probability of quickly regaining previous highs seems medium in the short term, but remains strong for the long term, especially with that $295 analyst target. Long-term investors can still be bullish on Google's robust AI initiatives and its diverse business segments, but they must monitor developments in the antitrust landscape and the competitive generative AI market. Keep a close eye on upcoming regulatory announcements and any updates on Google's AI advancements, as these will be critical in determining GOOGL's direction. Always remember to manage your risk and stay informed on the fundamental drivers alongside the technical indicators. That's all for today's in-depth analysis on Google. Thanks for watching Explain the Charts.